Right. Good morning, everybody. Good morning. Welcome to the room. Joel, good morning. Hamid, good to see you. Erla, Steve, Ron, Jeffrey, nice to have you here. Ed, good to see you. Welcome to the room, guys. Welcome. Excited. I love Wednesdays. We're halfway through the week, y'all. You made it. Uh-oh, John Novak's in the room. Watch out, everybody. Guys, today is Wednesday, September 25th, and in regards to news, we have new home sales at 10 a.m. This is medium impact. Medium impact can move the market. It can shake it. It can make it spike, jump, do all these things we don't want it to do. So essentially, anytime I see medium impact, anytime I see high impact, I have to say to myself, there may be an emotional response in the market. I choose to not trade into that emotional response. It's just part of my plan. You could make it part of yours if you felt like it. Wednesdays every week we have crude oil inventories. Very often you'll see the market spike again when they release those barrels. So every morning I come to forexfactory.com and all I'm doing is looking to see what's going on in the wonderful world of news so I don't get caught out. Everything that I talk about, guys, comes straight from the Nexgen T3 page. There's two sections that are worth mentioning. The first one, well, actually, they're all worth mentioning, but you know what I mean. The T3 Fibs Pro Trader Software User Guide. So this one is going to be where you find all of your Ninja Trader how-tos. So if you're brand new to the platform and you're kind of coming to terms with Ninja, scaling charts, putting in stops and targets, moving your stops and targets, screen capture programs, how to take a picture, how to post it in the room. All of that's for you right here, along with the Ninja Trader 8 best practices, what you can do to keep it running smooth each and every day. And then the next one is going to be the trading guide. And this is where all the answers come from. Everything that I talk about every day can be found inside of this trader guide. This is where the rules for the first trade that we talk about are going to be found. And if you go to the glossary of common terms, the one that I really want you to see here is what we call a high probability trade. Because a high probability trade, it's defined as when each indicator on every chart agrees for the rules for the trade, guys. This is when your triggers are the strongest, when there's no termination conditions, there's no trouble spots between you and your entry spot. This is what we talk about every morning. And this is really the first hour each and every day. We talk about what we call a high probability trend trade. Hey, good morning, Miss Jen. And we talk about this high probability trend trade every day for a couple reasons. The first one is that this is a trade when you follow the rules, typically wins 70 to 80% of the time, guys. This is your first trade. This is your foundation trade. This is the one that's going to create an awful lot of confidence through that memory of success. But more importantly, what this trade does for you guys is it lays down that super solid foundation, and it teaches you how to read your indicators, how to look at your workspaces, how to look at your charts and say to yourself, hey, I have these advantages, it's time to take a trade. What you will find, let's get my pew, there we go. What you'll find is that about 90% of your day is reading indicators. 90% of your day is waiting for the best of the best. 90% of your day is honestly kind of doing nothing. Good morning, Zorro. 10% of your day will be trading, taking those advantages, finding entries, management, all the things that go into being a day trader. It's not a big percentage of the day. But once you're good at reading your indicators, once you're solid with these very basic concepts that we're going to talk about in the first hour, you will understand where the market is likely to continue. Initially, this is your entry spot for the highest probability trend trade. That's the whole first hour, is pinpointing this likely to continue area. You will ultimately know where the market is likely to go. This is going to help you make great decisions on targets. And then finally, you'll understand where the market is likely to stop. And these likely to stop areas are what we call termination conditions. And a termination condition can literally stop the market in its tracks, make it reverse, create untradeable bounces. So you're going to be able to identify all of these three things, and you're going to develop this skill, this chart reading skill, through a trade that only has three rules. These are the rules for the high probability trend trade, guys. Each rule provides an advantage. So we're going to focus on the advantages individually. My hope and wish for you guys is that you begin to speak to yourself out loud, like scare your pets if you have to, saying to yourself, I have the advantage of momentum. There is a clear path. Let me find an entry area, and really commit to having rules met if you're going to pull the trigger and get into a trade. Your first rule says that you must have strong trigger lines, and when you do, you'll have the advantage of momentum. The termination condition's false. Rule number 2, this is going to give you room to your profit targets. This is going to be what we call a clear path. And rules 1 and 2, momentum and a clear path. Once you get these two concepts down, you have the foundation and every tool that you need to create a profitable and a consistent plan. Something that really revolves around advantages. And then rule number 3 initially is the entry area, pinpointing exactly where the market is most likely to continue. Rule number 3 is unique to the high probability trend trade. And rule number 3 is going to change as you change. It's going to grow as you grow. Hey, good morning, Wayne. So let's really focus on momentum and clear path. And then believe me when I tell you, you will find ways to capitalize. You will find ways to take advantage of the market if you keep it simple. These 3 rules happen on only 2 charts. The large chart leads the way. I think that's worth writing down on a piece of paper. The large chart leads the way. The large chart tells you that it's time to look for a trade. And your large chart's a pretty slow moving chart, guys. It's a very broad stroke of a brush. And you will actually use the most current bar, the first bar, the one furthest to the right on the large chart, and it will define the direction of the market. It will let you know whether or not you have momentum, and it will define the areas that could be problematic for you. And rules 1 and 2, giving you the advantage of momentum and a clear path, will come to be on the large chart on this most current bar. Once the rules are met, those advantages are in place, you're going to be able to pinpoint where the market is most likely to continue with that trend, with that momentum, with that clear path. You're going to do it on the small chart, the faster chart. It's a refinement chart. This small chart takes an X-ray of the large chart. Inside of each of these bars, from down to up, there's typically 15, 30 bars, somewhere in that range. You're going to use this small chart to pinpoint your entry, to get into the market right where it's most likely to continue. And this small chart really allows you to reduce your risk. It allows you to increase your profit potential. And that's rule number 3, the precision that comes with that smaller chart. We use these 2 charts because there's an awareness of who you're trading with or who you're trading against. Your large chart, your slow chart, that broad stroke of a brush, guys, this reflects the large crowd opinions, the people that wake up in the morning and they have the means to create trends, to establish momentum. And these are the people that react at those key areas. Large crowds is going to tell you what direction the market's going, how fast it's going that direction, and whether or not there's something in the way. The path of least resistance is to trade with the large crowd, to just go with the flow. But then you have the small crowd. This is the small chart. And these guys still have way more influence in the market than you and I ever will. And they love to fight. They love to push and take quick profits. But what happens is these guys typically fail 70 to 80% of the time. So what we're going to do is we're going to go with the flow, but we're going to use the small chart to pinpoint their failure, where it's most likely to happen. And this will become your entry for the highest probability trend trade. Because if they fail 70 to 80% of the time, it puts us in a position where we can win up to 70 to 80% of the time. We're going to keep it pretty simple, guys. We're going to focus on those 3 rules. We're going to keep it on only 2 charts. Your job coming into this is to learn the trigger line and the Fibonacci rules for when it's okay to trade. Fortunately for you, my job is to teach it to you to recognize these looks, to understand the advantages they provide, and then ultimately to piece them together to create a trade. Simulate. I want you to practice. I want you to take trades that you think you see. I want you to follow rules that you believe you understand. But the most important thing that you can do, and this is the first step in becoming a confident trader ASAP, is post those pictures in the room, guys. Make sure that you're posting in the room when you take a trade, but more importantly, Tell me what you see. Go back to those 3 rules. Use that language on the chart. Talk about the momentum. Did you have it? Did you not? Talk about the clear path. How did you feel about it? Show me where you enter. Show me where you exit. And what's going to happen, guys, is every time you drop this picture in the room, you get a private session with me. We're going to look at your chart. We're going to talk about the advantages. We're going to analyze your entry, your exit. And if there is a misread, perhaps you misunderstood momentum in a clear path, you and I will work together to clear that up. We'll go back to the lesson plan to make sure you understand it. And the other thing we'll do is sometimes there's a way to get into the market with a little less risk, a little more profit. If I see those opportunities, we'll work through it together as well. And the goal, the end goal, is that you're comfortable, that you're confident, that you're seeing these things. My job is going to be to make sure that you're seeing things correctly. We're going to try to get you to have the correct rules. Why? Because the rules have been proven to win more than they lose. And the people that try to get lucky, typically it doesn't work out long term. So post them in the room, tell me what you see, tell me why you did what you did, and we're going to simplify a lot today. We're going to talk about this high probability trend trade. We're going to look at the looks that you're going to commit to, and I need you to learn them so that they become easy. You've got to go through, you've got to recognize these patterns so that when the market is moving, it becomes easier to execute. The way to do this, the easiest way to do it, is the spreadsheet that Nexgen gives you when you download the software, the same spreadsheet that I drop in this room every day, and I just did into the chat box. But the spreadsheet has 4 tabs on it. The first tab is a trade journal. This is all it is. Every time you take a trade, whether you win or lose, it doesn't matter. Take a picture, annotate the chart, talk about your advantages. And then more importantly, write down the feedback that you got in class. Because what happens is by the time you present 4 charts, 5 charts into this room, I'm going to begin to recognize patterns in you the same way you're learning to recognize patterns in the market. I'm going to see if maybe you get in a little early or you hold a little longer than you should. Maybe you're fighting things. Guys, the feedback that you get is going to help you out each and every day. And the easiest way to use it, the best way to use it, is to go back every morning and study what you did. Go back, rewind. What worked? What didn't work? What felt relaxed? What felt forced? What are the patterns that are bringing me success? What are the patterns that appear to be taking that away from me? And this little study each and every morning, guys, it will accelerate the learning. It'll set you up for success. You'll get there quicker. So use that first tab. The second tab is each rule for the high probability trend trade. They're broken down individually, guys. We have strong triggers, exactly what it looks like. We have a clear path, and we have the entry. But I think it's important to understand both sides of the coin. To recognize strong triggers is awesome. This is when it's time to look for rule number 2. But to recognize when the rule isn't met, when it's time to be patient, when you're in that 90%, typically tends to be just as important. So we've got strong triggers and weak triggers. We've got clear path as well as termination conditions, and then those high probability trend trade entries, guys. I'm going to give you a worksheet before the day is over so that you can go through and begin to fill this out and do this study so that you can become a chart reader just a little bit faster. Where are we at? We're on the spreadsheet, right? Third tab. This is where you're going to build your trading plan. I'm going to hand you a plan that's designed to optimize your chances of success with the high probability trend trade. Attached to that plan will be a second trade for you that's designed to optimize your chances of success with a high probability, with a 50-50 trade, which is a medium probability trade. You'll find that you will be taking both high and medium probability trades, and your ability to read charts is going to allow you to manage them. So you will have a solid plan coming right out of the gates, but as you grow with the software, you will see more patterns, you will see more opportunities, you'll find different ways to capitalize on advantages. This is where you're going to build your plan. Your page should look like the page that I've put together. Under client trades, guys, there's almost 400 pictures of Nexgen clients presenting in class. Taking those advantages, turning them into money. And I'm going to give you the little warning right now. These are client trades, and not all of them are perfect high probability trend trades. Some of them deviate from the rules. Some of them really lean onto some advantages. And what you're looking at here, is how you may be able to use the software as you learn to become a chart reader. And there's a lot of brilliant stuff in here. There is the entry sequence for the high probability trend trades, both short and long, step by step to pinpointing where the market is most likely to continue. There's a very mechanical, basic management plan, as well as ideas on when you can begin to hold for bigger moves. There's patterns that repeat themselves, a whole section dedicated to termination conditions, because termination conditions tend to be the most broken rule out there. So use that spreadsheet, fill it up, ask a million questions in class. Nobody has ever asked too many questions. In 4 or 5 years of doing this, nobody has ever worn me out with questions. Try to be the first, I dare you. You've got to learn these looks though, because that's what makes it easy. When you know exactly what you're looking for, that's when the trust sets in. So we're going to get to work, guys. Rule number 1 says that the large chart must have strong trigger lines, that the large chart has got to give me the advantage of momentum. And this is probably the easiest lesson that I give each and every day. If the background on the large chart is green, the market's going up, guys. And we're looking for rules to be met for high probability trend trades long. If the background is red, the market's going down. We're looking for rules to be met for high probability trend trade short. Going with the flow, easiest thing you can do. In order to have strong triggers in an uptrend, guys, your small triggers, these solid lines, have to be above and broken away from these large trigger lines. I want you to picture scissors that have opened, ready to cut. You'll notice that anytime you have strong triggers, the background is green, the large triggers are green, as well as the small triggers. The colors all match. This space lets me know that the odds are favorable for the market to continue up. In a downtrend, when the background is red, small triggers are red, large triggers are red. There's the space between the two as the small break away and get below the large triggers. Once again, scissors are open, guys. That's how you get work done with scissors. They have to be open and ready to cut. Odds are favorable for the market to continue down. You're going to hear all day long in this classroom, odds favorable momentum. You're going to see it annotated on charts, OFM. Guys, odds favorable momentum pushes a market in the direction of the trend. Odds favorable momentum has the ability to break those key Fibonacci areas. And odds favorable momentum, God bless it, will cover a lot of the mistakes that we tend to make as new users because it's hard to stop. When I have strong triggers up or strong triggers down, that's when I'm buying Fibonacci support on that smaller, faster chart or selling Fibonacci resistance on that smaller, faster chart. On a large chart, on a slow chart, the entire pullback on a small chart just looks like a tail. You're going to be able to use that refinement chart to pinpoint exactly where these tails are most likely to form, both long and short. And these tails will come into play as you begin to go back and study this pattern and develop some trust in it. So when the scissors are open, strength is there. Separation means strength. Strength is momentum, and momentum means the odds are favorable for the market to continue up or down. Once your small triggers return to the large triggers, once they work their way inside of the large triggers, we call this a weakening of the large triggers. And when you weaken large triggers, anything can happen up or down. And you really just give that advantage away. And I'm a huge fan of language. Strength, weakness, odds favorable to continue, anything can happen. Start working that language into your everyday, and what you'll find is that you don't even want to trade without the advantage of momentum. And if I open up a large chart, this is crude oil. Separation between the small and large says strength, it says momentum. The market's continuing up, and it was that strength that gave us the ability to break the key area. If you back it up a little bit, this move began with very strong triggers breaking areas, and that's what set up that strong trending market down. Strength pushes, guys, and you're going to see this all day long. Strength again, and this is a great lesson because these strong triggers are rule number 1. Rule number 1 is an important part of what we do, guys. I never want to sacrifice that one. But you'll notice that the market kept hitting these darn lines and it changed direction. And that's kind of a great little run to rule number 2. making sure that termination conditions are false, that there's no areas likely to stop the market in your way. This is going to give you room to the profit targets. And guys, we're just going to call this a clear path. Plain and simple. Horizontal lines on your large chart. Easiest way to say it. Horizontal lines on the large chart have the potential to stop the market. They have the potential to create a bounce. This is where the large crowds are making decisions, where the buyers buy and the sellers sell. And the reality of it is that you don't have to be caught up in their decisions, because you see these lines long before you get there. So we're going to go through and just name them, know what it is, so that the language is cool for everybody. We have a divergence high line, which is a magenta line. I matched the colors here. And it'll print if there's a loss of momentum at this pivot, guys. If the market goes up, goes down, the momentum is lost. We don't know it until about 3 bars in, but this negative number and this magenta line will print. You see it from a low as well. Divergence low is a cyan line, and it'll print this line and this negative number if there's a loss of momentum. Red Fibonacci resistance, when the market is trending up, this is a point where the market may stop, may bounce, may reverse completely. And then the blue lines, Fibonacci support, do it the other direction. If the market is trending down, these are the areas where the large crowd are making decisions. They may reverse the market, they may stop, it may bounce, there could be a fight. And then we have these yellow 1-to-1s. And yellow 1-to-1s are fibs that print in the moment, guys. If the market is trending up, yellow 1-to-1s can behave as resistance. And if the market is trending down, they can behave as support. So you don't have to know how these come to be, but what you want to know is that anytime I have a horizontal line, I have to go through a very simple process to determine whether or not it's likely to stop the market. Everything begins with price reaching that area. Price bars reaching Fibonacci resistance, price bars reaching Fibonacci support. It's reaching the area that sets off that decision making among the large crowd. So if price is trending up, the market's going up, everything says up, and then you reach Fibonacci resistance. The only thing that you have to do is ask yourself, where are my triggers? If your triggers remain below resistance, if your triggers remain above support, these are areas that may stop the market. These are areas that may create an untradeable bounce. These are areas that could reverse the market completely. And if they do, we're going to call that a strong top or a strong bottom. And what you find is that when price reaches resistance, the triggers remain below, and then it reverses the market. Any trades that happen right after that reversal tend to be the ones with the highest probability for winning. So a strong top and a strong bottom is a precursor. It's an advantage as you go into the next trade. Price reaches resistance, price reaches support. Where are my triggers? Guys, it's a termination condition. Rule number 2 simply says, don't trade into the area. Pause for a second. Wait, let's see what the reaction is. It might bounce, right? They may fight, or it could break. And an area is broken when both the small triggers and the large triggers get to the other side of support, or when both the small triggers and the large triggers get to the other side of resistance. And what you'll find is that when this happens, support begins to behave as resistance, and resistance begins to behave as support, guys. And this clear path, rule number 2, will remain met and true until you reach the next area. So for the high probability trend trader, you either have a termination condition, no trades, sit on your hands, wait, let's see what the reaction is. And what you'll find is that every time you reach a line, it's probably going to be a termination, at least for a moment. And then it's either going to break, smalls and large get below, or it's going to reverse, or it's just going to dance around for a while, guys. And this is kind of the only options for the brand new user. Price reaches Fibonacci support. The trigger lines can't seem to get through, and sure enough, it bounces up. Even with odds favorable momentum, resistance stops it to the tick. And look at this. When support breaks, the market comes back and retests it as resistance. All the lessons you need without taking a trade. Divergence low, support, bouncing, bouncing, weak triggers, bouncing. Holy smokes, guys. These lines show you where decisions are made. These lines say don't take that trade into the area. There may be a reaction, and what you'll find is that rule number 2 is going to keep you out of a lot of problems. So brand new users, once again, if price reaches the area and the triggers don't break through, it's a termination. Let's sit on our hands. Let's relax for a minute. Let's see what the market's going to do rather than try to predict. If both the small and the large triggers break through the area is broken. And if the area is broken, the path is clear, and we're going to look for our rules to be met until we reach the next area. Can you guys give me a why in the room if you're with me on this one? I know I've still got some newer people in this room. I want you to keep it simple at first. It's either a termination or it's a clear path. And then from there, you're going to come into your second trade. You're going to come into that next trade, that medium probability trade, guys. And this one kind of requires you to understand the first lesson. Because when your small triggers absolutely smash through an area, but your large triggers are lagging behind, with odds favorable momentum, this area has the potential to break. And it's only potential, which means that it's not a clear path, which means that we're not going to call it a high probability trade, which means you may need to manage a little more aggressively. And I want you to see this. Potential to break, but it didn't. Potential to break, and there was a fight. And then they headed off. And one of the things that you'll notice if you go to that large chart is almost every Fibonacci area, there's some sort of fight all the way through. Even with the potential to break, you can see the spike. You can see the spike. And then once we get the termination condition, there's a reversal. So I want you to get accustomed to understanding that lines on a large chart may create a bounce. Lines on a large chart may stop the market. Lines on the large chart are the places that we're going to look because that's where the large crowd has the potential to react. And does everybody see right now? We've reached Fibonacci resistance and the trigger lines have not broken through. This most current bar lets me know, pause, hit the brakes, maybe no long trades just yet. Let's wait a minute. Let's see if we get the potential to break or let's see if we get the reversal. We never have to predict it. Rule number 2 is going to keep you out of the mix. And then there's going to be times when your path isn't clear because areas are stacked a bit, guys. 90% of your day is waiting for the advantages to come together to produce a trade. And it's okay to do nothing. And you'll find that the most successful traders out there are capable of doing nothing when there's nothing to do. The futures markets trade billions every day, guys. It's not necessary to be in every move. Every tick isn't your tick. Every dollar isn't your dollar. And the reality is you only have to capture about $400 a day to put yourself in 6 figures. So if price reaches support and the triggers haven't broken, hit the pause button. Let's wait. Let's see what happens. If the smalls finally smash, but it's right into another area, guys, you got to pause again. And that just is going to continue until that path clears out for you. And what you will find is that Fibonacci on the large chart, guys, the whole reason you ended up with me today, gives you the ability to see where the driving forces of the market are likely to make decisions, guys. And very often, rule number 2 will keep you from taking trades in consolidation and chop. Rule number 2 is going to account for that 90% more often than not, guys. In a 6-hour day, you might be in trades 36 minutes of it. Maybe. And rule number 2 is going to keep you from giving away money when you shouldn't be giving away money, guys. Avoidable losses. So let's take one more look at the large chart. Let's see what that termination condition did. Did it hold? We're still bouncing, huh? We're starting to break through, but we're weakening. And sure enough, it just hasn't gone yet. Let's see if the S&P has termination conditions. Nope, that one appears to just be going up, doesn't it? There's the fight at Fibs. And guys, this is the one that we're going to talk about in just a second. See that tail? We're going to see if that was a high probability trend trade. But first, we're going to talk about the rules. But give me a why. Is everybody good? Rule number 1, large chart, momentum. Separation between the triggers, giving us the advantage of a market that's likely to continue in the direction of the trend. Once we have momentum, making sure we're not running head first into a wall. It's the easiest way to think about it, guys. But when we have these, when momentum is there, when the path is clear, we're going to go to the small chart. We're going to look for an entry. And before we pinpoint that entry, we're going to make one check, guys, because there's one thing on a small chart, and only one thing on a small chart, that'll take away my clear path, and that is 3 divergences in the same price range. So if I show up on the fast chart looking for an entry, and I see 3 divergences from a low or 3 divergences from a high, guys, then the market may reverse. It may bounce. It may push a little bit. And 3 divergences is just the small chart showing you change that you can't quite see on the large chart. It becomes more powerful with weak triggers. You remember that lesson from rule number 1, those anything can happen triggers. And it's more powerful still, and you guys with a little experience will recognize that as a head and shoulders pattern. When the third pivot is higher than the previous from a low or lower than the previous from a high, it adds a little strength to those 3 divergences. And that is the only time that the small chart will tell you that there's not a clear path when there's a high probability trend trade setting up. If those aren't there, we're going to pinpoint. We're going to be precise. So precise that you're going to use a limit order to buy or sell a pullback, that little shove from the small crowd, and you're going to do it at areas. And those areas need to be inside of triggers, guys. The language of rule number 3 really does make it easy to pinpoint. If you embrace each word, using a limit order at areas inside of triggers, and specifically favorable large triggers for the new user. Favorable large triggers are wide. They're in the direction of the trend, and both the large and the synthetic triggers are overlapping. This provides the smallest window of opportunity for entry, guys. Price returns to large triggers. It's just a gospel truth at this point. So on the small crowd, we expect price to return to the large triggers. The small chart. On the large chart, I expect price to return to the large triggers. So what we've done is we've taken the large triggers off of the large chart and put them on the small chart. That's your synthetic triggers. And when they overlap, we've got 2 separate correction points in the exact same zone. And when we put areas inside of triggers, we give the market something to bounce off of. So, small chart price may return back to the large triggers, and this becomes a very important lesson. You're going to carry this one with you forever. I have 1-to-1s and Fibonacci support inside of those large triggers. Both of these areas may produce a bounce to continue with the trend. My synthetic triggers, my large chart may retrace back to my synthetic triggers. And inside of them, I have a mid-band that may produce a bounce. So I've got the correction points and something for the market to bounce off of. Your window of opportunity will be the areas inside of triggers. This is where the market is most likely to bounce. This is where the small crowd is most likely to fail. This is where continuation is most likely to happen. And you can see that it is a window. It's a range from the highest point of support to the lowest point of support. So when you're looking to activate your limit order, when you're looking to enter the market, guys, the first thing you do is make sure that the large chart rules are met, that there's odds favorable momentum on the large chart, that there are no termination conditions on the large chart. And once you have those, once you have odds favorable momentum and a clear path, you're going to wait for a reversal bar. And you're going to start biting your nails and getting sweaty as the market's going up without you. This reversal bar signals the beginning of the fight, the beginning of the pullback, the retracement. The reversal bar is not your entry. The reversal bar says, let's look for those favorable large triggers. Let's look for large and synthetic, and let's hope that they're one on top of the other. And then you're going to look inside of those trigger lines for areas, fibs, mid-bands, yellow 1-to-1s. These are the areas that can create a bounce. These are the areas that are like a brick wall, and price is that tennis ball. And this is exactly where we anticipate a bounce, guys. And you're going to create a window. For a long trade, it'll be from the highest point of support, a mid-band inside of favorable large triggers, to the lowest point of support, yellow 1-to-1s inside of favorable large triggers. Guys, this blue shaded box is where the small crowd is most likely to fail. Because of the advantages on the large chart, because of the momentum and the clear path, you're going to activate a limit order a couple ticks above the highest point of support. And at that point, you have done everything that you can do as a trader. You have insisted on momentum, rule number 1. You have made sure there's a clear path through rule number 2. And you have pinpointed exactly where the market is most likely to continue. And you're waiting for the small crowd to see if they can push to your entry. And if they do, guys, you're in the highest probability trend trade possible. Things that you need to understand as you progress is that price is likely to return to these triggers. Price is likely to bounce off of an area inside of the triggers. Once you get to the other side of the triggers, once you're on what I call the wrong side of the triggers, any line doesn't matter, guys. Once you get below those triggers, you're in no man's land. And there's no telling where the market is going to stop. And you're going to use this idea where the market is most likely to continue to also help you define where the market shouldn't go. And this is going to work its way into your management plan. So going the other direction. Large chart says down. Large chart says odds favorable momentum. Large chart says let's go look for an entry. You wait for the reversal bar, that signal of the pullback, not your entry. It's going to set it off where you start looking for triggers, hopefully favorable, one on top of the other. And then from the highest point of the triggers to the lowest point of the triggers, we're going to look for a line. Fibs, midbands, yellow 1-to-1s. Guys, we have one line inside of favorable large triggers, one area inside. This is where the market is most likely to continue, where the small crowd is most likely to fail. You're going to activate a limit order a couple ticks below it, and you're going to wait. You've done all you can do. Any line on the wrong side of the triggers, beyond those triggers, guys, this is not where we want to be. This is where the advantage is gone. This is where the market should not go. So it's not in the window of opportunity. What do you guys think? Can we do this? So this is high probability trend trade, guys. I want you to see something. Large chart says up. Does everybody see it? Let's do this. Let's do an entry together. I'm going to get rid of the cheater circle here. Bum, 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 bum. So you guys want to work through one together, bar by bar? Large chart has odds favorable momentum. Does everybody see it? Smalls above the large are wide. They're angled in the direction of the trend. Rule number 1 has been met. My small triggers have absolutely smashed through the fib. My large triggers are trying to catch up, so I have the potential to break. Guys, this is an opportunity. So I go to my small chart. Notice that everything is going up, and it continues to go up. And it's terrifying because how am I ever going to get in a trade if they don't come back for me? And then just like the siren song, guys, it's magic. You get a reversal bar. So the large chart says up, the large chart has the potential to break, and the small chart just gave you a reversal bar, the beginning of a pullback, hopefully. So from the top line of my triggers to the bottom line of my triggers is exactly where I expect price to return. Is everybody good with that? Those price bars may come back to the large, they may come back to the synthetic. This yellow box represents where price may return. Everybody's good so far? We're pinpointing exactly where the small crowd is most likely to fail. Your window, where it's most likely to happen, extends from the highest point of support, it's a midband, to the lowest point of support, Fibonacci support. You guys good? Strong triggers, potential to break, reversal bar, areas inside. This yellow box represents where the market is most likely to continue, guys. You have to right click and put a limit order right there. Buy limit. I don't know why that's on 10. We'll buy limit 2. A couple ticks above the midband. And guys, this is it. This is your entry. You've done all you can do. And now we're hoping that the small crowd pushes it down. Notice that the mid-band comes up as price comes down. You may need to adjust your order one tick. And boom, you're in a high probability trend trade, guys. You have the advantage of momentum. You have a clear path, almost. You have no divergence, strong triggers, pull back 2 ticks above the mid-band. And there it goes. And guys, this is your entry for the highest probability trend trade. This is not a tail on the large chart. And I want you to see what happens when I move that box to the bottom of that move. It's right at the base of that tail. So we're going to use these tails to study, to see if the market did pull back to an area of support inside of favorable large triggers. Does that make sense to everybody? This is what you're going to have to practice. Practice getting in where the market is most likely to continue. Practice finding that window of opportunity, and understand where the market shouldn't go based on your ability to recognize where it should continue with the trend. And guys, what happens is that where the market shouldn't go area is where your first stop is going to be placed, typically 4 or 5 ticks above all the trigger lines. And if the small crowd has an item to push past the triggers, to push past the areas inside of triggers, your advantage is gone. The edge is no longer with you, guys, and you will take a loss. And I'm going to remind you that anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. Losses are a part of trading. Losses are a normal part of a positive equity curve. My hope is that if you're going to take a loss, you take the right loss. You take the loss that had momentum. You take the loss that had a clear path. You take the loss that had an entry area where the market is most likely to continue, because you know this is a pattern that has been proven to win more than it loses. And for you skeptics, I want you to go back and I want you to start circling those tails and see how often it happens. So guys, that's the high probability trend trade. That is the perfect. That is the best of the best. That's the one that gives you odds favorable momentum, that gives you a clear path, that gives you favorable large triggers, and you pinpoint your entry, whether it's a long, whether it's a short, and your stop placement goes where the market shouldn't, guys. That's the perfect scenario. Very rarely is the market in the perfect scenario. It's not hard to get momentum. It's not difficult to find a clear path. Entries change, and entries grow as you grow, whether it's the high probability, whether it's momentum, HVA. There's so many ways to make money with the software. But what you have to understand, does everybody remember the lesson that price returns to the large triggers? So favorable large triggers is the best of the best. Guys, you're going to get this look very often. You're going to get a separation between the large and the synthetic. That does not change the fact that price may return to the large and price may return to the synthetic. Guys, you have to have that in your core knowledge, because what it does is it helps you define where stops go. And when you have lines, yeah, Wayne, this is the first day you haven't made a trade before class. It happens sometimes, right? 90%. The S&P it just sat still all morning. I kept going back to it and it was still in the same place. It happens some days. Guys, triggers are where price may return. Areas are what may create the bounce. It may bounce from a mid-band hovering in between the triggers. It may bounce from Fibonacci support down here in the synthetics, guys. No matter where it bounces from, upon entry, your initial stop goes where the market shouldn't, below the triggers. That's a lot of risk coming into a trade. So there's an idea that I share with you guys. The large chart's perfect. The large chart says up. The large chart says clear path. But guys, the entry's wonky. Can we use that word? It's not favorable large triggers. It's not very easy to define. There's a little bit of indecision and an awful lot of risk. Confirmation bar. When there's a lot of space between the triggers, guys, when the areas are spaced out, you can use a reversal bar in the direction of the trade for entry. And this reversal bar doesn't guarantee a win. But what it does is it will establish your risk. Your initial stop movement will go 2 ticks below a reversal bar in the direction of the trade. So if this is a potential entry and this is a potential entry, waiting for a reversal bar gives you established risk. And it doesn't mean that it won't come down to the other area, but it means that you won't take a huge loser if it does. So reversal bars are confirmation for when the rules are true, but the entry isn't perfect. Does that make sense, everybody? I see this a lot. And that's how this worked its way into the plan, because I want to make sure you guys get that lesson. But you've got to study. I want you to be a little skeptical, guys, as you come into this. I want you to say, man, it can't be this easy. It can't be this simple. I had a guy tell me that once. He goes, you don't have enough rules for a successful plan. Which is interesting, but that's how the human brain works, guys. If I have momentum and the potential to break, or a broken area and the path is clear, if I haven't reached the next area, guys, I'm looking for a pullback to support inside of favorable large triggers. I can study this look by circling tails on the large chart whenever the rules are met and seeing if they give me an entry opportunity on the small chart. Ideally, it's favorable large triggers, but we've just covered how you can do it if the entry isn't perfect. And guys, this is my first hour every day. So let's do this one. Potential to break, strong triggers, big tail. What's it look like on a smaller, faster chart? Well, that's horrible. But I want you to see something cool. Is it pulls right back to resistance inside of triggers, and it pulls right back to resistance inside of triggers. It's a window, right? And it never gets above those synthetic triggers. It never goes where it shouldn't go. And sure enough, it drops out of bed. And then just a little bit later, it pulls directly back to resistance right inside of triggers, and it doesn't go where the market shouldn't. And sure enough, it goes down again. Does everybody see that? We're developing trust right now. We're developing the ability to look at the large chart, say with all that momentum and the potential to break, there's those wonky triggers, right? And there's like 1, 2, 3, 4 of them. First one from here, reversal bar, ugh. Reversal bar, ugh. 3 divergences in the same price range, says don't do it. And then, damn it, it goes without us. This is going to happen sometimes, guys. But you have to adhere to rules. Because rules are designed to keep you safe. Rules are designed to give you advantages. And Jen says rules are great. Waiting for the setup is the key. I agree 100%. You guys know what my worst attribute as a human being is? Waiting for the setup. There's a tail. Let's go back. This is yesterday, so we'll scroll back. Whoops. Let's see what it looks like. 9:41 in the AM. Holy smokes, right back to resistance inside of favorable large triggers. Guys, this isn't me handpicking pictures to show you. This isn't me trying to convince you of something that I have to take 5 pictures and then sell you. Go back, circle them, see how often it happens. Develop some trust. And once you have that trust, once you understand the look, guys, it becomes easy to catch these trades because you know exactly what you're looking for. So in order to get there, guys, there's things that you have to be able to recognize quickly. And one of those things is strong triggers. Another one of those things is a clear path. And you've got to be able to pinpoint your entry, guys. Chart reading 101. I give this out every day. Take 25 pictures of each. Annotate them. Talk about the whys. Why are they strong? Why is it a termination condition? What does it mean to me? What's the advantage? What's the disadvantage? Guys, the more you type on your chart, the more likely you are to commit this look to memory and associate phrases with the success it brings you. Strong triggers because they are wide, they're open. The smalls are above the large. Rule 1 met momentum. Guys, 100% that is your look. And then look at this. Weak triggers, smaller inside of the large. Anything can happen. Rule number 1 not met. Build this mental database. Create a correlation between the rules and the look. And I'm telling you, if you take the time to do this, do 5 each a day, 25 pictures, guys. It'll take 20 minutes of your life. The easiest way to become a confident trader is not trading. It's taking pictures for your first couple weeks and committing the looks to memory. And as you do that, I'm going to give you the cheat sheet. What's it look like? I want to make sure I'm taking the right pictures. And of course, you can always drop them in the room, guys. I can't wait to talk about your pictures. But is the market coming from a strong top or bottom? If a termination, price reaches, no triggers break. If it reverses the market, it's a strong bottom. This is the precursor for the highest probability trend trade you can take. Do I have momentum? There is momentum, both directions. There's weakness. Make sure that you know the difference. Termination, potential to break, broken. You've got to get to where you don't confuse those, because understanding what you're up against is going to help you understand how you need to manage the trade. And then windows of opportunity, guys, for both longs and shorts. Exactly what you wait for, how you define the area, where your limit order goes. This is the first page. The second page is a checklist. Print this out. Grab your most delicious crayon and make sure that you can mark yes to each of these, guys. Is the market coming from a strong top or bottom? It's not mandatory. You may have to use those divergences, though, to manage it. Odds favorable. No terminations. And guys, look at the language. Area inside of favorable large triggers. These are the words that you need to be writing on your charts every time you take a picture, every time you take a trade. Learn how to police yourself. Never had anybody in the history of this checklist do worse than 70%. I've had engineers run this through the simulator over the course of a year, and they ended up around 83%. Guys, this is your foundation. This is the base. And then finally, I'm going to give you the KISS plan. What to do with those rules. Z-Robot, rules are the mechanism to fly. Liftoff gets the prize of flight. Every pilot has set rules. Cigar, controls, instruments, gas, ailerons, I'm not sure what those are. Radio, rules to fly. Have a safe flight. Yep. And guys, pilots do well with the software because the pilots are accustomed to using checklists. It's true. This is the plan that I promised you in the beginning, guys. I told you that I would give you everything that you need to be successful. This is the plan. This is your stepping stone in the learning journey, guys. This is designed to optimize your chances of success with a high probability trend trade. If you are a brand new user, this is the beginning, the foundation. This is your first trade, not your only trade. Oh, thanks, Rob. And then through simulation, study, class feedback, notice that it's underlined, and continuous practice, you'll be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. Guys, once you can read your charts, you're going to find opportunity. You're going to find more entries. You're going to find more reasons to manage. But until you get there, this is the plan that typically wins more than it loses. This is the plan that creates confidence through the memory of success. This is the plan that teaches you to read your indicators. And yes, I have people brand new that have funded accounts in their first 30 days with Nexgen on those prop firms by simply following this plan. And your simple plan for consistency, guys, don't fight the large chart. There's never any reason to fight the large chart. The large chart is the large crowd. They tell you which direction they want the market to go. They tell you whether or not there's momentum for you or against you. The large crowd tells you everything that you need to look for an entry. So you have to define your entry. Don't trade into areas. Don't fight triggers. And then once you define your entry, guys, the highest probability trend trade that you can take, you have to do something with it. And that's where management comes in. And I'm going to pull this up. And we're going to go through management from the spreadsheet. This is all available to you to look at, guys. And the disclaimer, you will craft a plan tailored to your personal goals based on your ability to read the indicators. Guys, you're going to find ways to manage differently. You're going to move stops differently. You're going to have different targets. But until you can do that, until you've got the repetitions to do it, guys, your best bet for success over the course of all the time I've been teaching is to just focus on getting paid initially. Keep it very mechanical. Keep it very methodical, pragmatic, if you will, because what that does is it helps to eliminate emotion. It helps to keep that heartbeat out of it, those sweaty palms on a dry mouse, guys. So your initial stop is always where the market shouldn't go. 4 or 5 ticks beyond the triggers, where the market shouldn't go. And then you're either going to get stopped out or you're going to get a reversal bar. Guys, it's going to be one or the other. They're either going to hit you up here or they're going to give you a reversal bar in the direction of your trade. This is your first stop movement. Once you enter at the area where the market is most likely to continue, you're either going to get stopped out for a loss. It's going to happen 2 to 3 times every 10 trades you take. You never know which 2 to 3 it's going to be, which is why you have to trust the rules. But more often than not, you're going to get a reversal bar going with the trend, with the momentum, with the clear path. Your first stop movement is 2 ticks above that reversal bar. And now there is nothing to do. You're either going to get stopped out, it happens, or you're going to hit your first target, guys. And the KISS plan is designed 100% to get you paid ASAFP. You take the perfect entry. You put your stop where the market shouldn't go. You reduce your risk behind the reversal bar. And your first target is only $100 in the distance, guys. $100, that's it. And it's an easy $100, especially with all those advantages. And then once you get there, you're going to go break even. You're not going to tighten up right behind it. You're not going to leave an exorbitant amount of risk on there, guys. You're going to put absolutely no risk on that trade via the KISS plan. So you've been paid. Your sweaty palms are gone. The butterflies have flown south, guys, and you have absolutely nothing to lose. And it's either going to stop you out break even. That's going to happen. Or it's going to go to your second target. And your second target's only $200 away from the entry, which means that if this trade goes to completion, you exit with $300. You're out of the trade, and it just doesn't matter what happens next, guys. And $300, if that's the best you do every day, is a $75,000 year. If the best you do is 3 trades that make it first target break even, it's a $75,000 year. And it only takes 1 going to completion and 1 break even to put you in 6 figures, guys. New traders have this fantasy in their head that they're going to make $100,000 a week for the rest of their life, that they have to make $1,000, $2,000 a day in order to be happy. And the reality is, guys, is you can make a lot of money based on small wins. Learn how to get paid first, and then eventually, where's that magic phrase? You'll craft a plan tailored to your personal goals based on your ability reading the indicators. And guys, this is what I do every day. I teach you the rules for entry. I remind you that you've got to learn to read your indicators to manage, guys. It doesn't take a lot of money to be successful each and every day. And then when you've practiced, when you're starting to get good at these entries, when management doesn't freak you out the way it freaks out new users, guys, and you're ready to get off of the simulator, you're ready to say to yourself, you know what? Let's do this. Let's try to make some money. There's 2 things that you have to know. You have to know why you'll enter a trade and why you'll exit a trade. I've given you both as a brand new user. Commit to having rules met. I can't stress this enough. Commit to having rules met, guys. Rules are patterns that have been proven to win more than they lose. If they have not been proven and tested and validated and verified, why on earth are they a part of your rules? The more consistent in action you can become, the more consistent in profits you'll likely become, because it's been proven to win more than it loses. And guys, it's your process that yields results. It's going through the action, committing to the rules, trading the patterns. That's where success comes from. Rules help remove the emotion associated with trading, guys. If you know that your pattern wins more than it loses, you will get to the point to where you don't care if you win or lose, because you know that every 20 or 30 trades, you're going to come out on top. Absolutely. So, Hong, a tick is the smallest movement in the market. So we're looking for stop placement. So what we're doing is every trade that you enter. Let's go to the KISS plan. If I enter the market long, and so that means we're going up. The reversal bar prints, and this right here, this is my entry. Are you comfortable with that? Reversal bar, highest point of support. Let's get in just above the area inside of favorable large triggers. Because it's important that you're good at this, because this is what dictates, these trigger lines dictate where the market shouldn't go. Your first stop is 4 or 5 ticks below the bottom of these triggers, per the KISS plan. You may change that as you grow with the software, but in the beginning, enter at the highest point of support, stop goes 4 to 5 ticks below the triggers. You with me so far, everybody? If I get a reversal bar in the direction of my trade, I'll move my stop 2 ticks below the reversal bar. And I'll say to myself, they're either going to stop me out or they're not. But at this point, everything is going the direction that I want it to go. I will have preset targets. One of them will be at $100. One of them will be at $200. If price comes up and hits my first target, my new stop is break even. I've got nothing to lose. And the cool thing is, I've got money in my account. And I'm just going to sit tight. And it's either going to hit my second target or it's going to come hit my stop. And I never know what that's going to be. So that's the very mechanical. That's the easiest way to manage as a brand new user, because what it does is it really takes the emotion out of it. It keeps you from wishing it would go further or hoping it doesn't come get you. You're learning to follow rules on your exit. Does that make sense, Hong? Does that help? And this is something that you need to practice. This is something that you need to be on the simulator, practice moving your stops, making sure that you don't move your targets. And that's what simulator's for. No, so 1 tick. Let's define a tick. Let's go to the market to do that. 1 tick. Do you see how price goes from 96.50, 96.25, 96? So a tick is the smallest movement that price can make. So depending on the market, the S&P, 1 tick from 25 to 0 or 0 to 75. This is 25 or 1250 every time. So if I'm in the market, you'll see that this moves 1250 every time. Well, that's 2 contracts, which makes it a little difficult on the math. Let's go to 1 contract. So the tick is the smallest movement in price. 1250, 1250, 1250 turns to 25, turns to 37.50. So no matter what market you're in, a tick is always a tick. It's the smallest movement. But on the S&P, it's $12.50. If you go over to crude oil, that 1 tick, whoops, that's the wrong thing. Let's go to 1, sorry. 1 tick is $10. $20 when it's 2 against you. So each tiny increment is only $10. So in order to make $100, I need 10 ticks. In order to make $200, I need 20 ticks. Does that help a little bit? It depends. On the S&P, 12 ticks equals a point. 1 point equals $50. On crude oil, each huge move, so from 71 to 70 is 10 points. But from 70 to 70, where are we at? So from 70.8 to 70.9, there's 10 ticks inside of that movement. And the cool thing is you don't really even have to understand that so much to still be successful with the market. But that's not a bad thing to learn. And one of the resources, guys, and I think a lot of people kind of skip out on this, the internet is this crazy wealth of knowledge. So you can go to the CME group, and this is the Futures Commission. They've got so much information, so much education on ticks, on contract sizes, on roll dates. And guys, I would encourage you, if you're one of those people that wants to learn kind of the whys behind the scenes, the CME side is amazing for that. They run everything. And some of it is opinion and some of it is education. But I'll give you guys the link right now. And I think a lot of times people don't study outside of what we do in class, but if you're curious about ticks, contract rolling, stuff like that, how can I go short if I don't own it? That's a good one. You know, how can I sell a future contract I don't own? So how does it, so there's the whole thing, right? And all these different options. So guys, go through and beat up the internet a little bit. Make them prove to you. What do you guys think on crude oil right now? Do I have odds favorable momentum? I've got green large triggers and I've got red small triggers. Anybody? No? Perfect, Wayne. Do I have a clear path? Price reach support and all of my triggers are above? No. So if I don't have momentum and I don't have a clear path, guys, where's my entry? How do I take a trade? Or is this part of my 90%? You don't. Amen, Wayne. Large triggers are red, small triggers are green. Price is right at a fib and my triggers aren't above it. Guys, once again, this is part of my 90%. I knew I wasn't going short with momentum because of support, but it maybe is a little too soon to go long. So that's kind of what we do each and every day, guys. And right now what I'm going to do is I'm going to give you guys a whole bunch of stuff. So brand new users, you can download this straight from the chat box here. You can click and drag it over to your desktop. You can download it to your download folder. There's an arrow that says download. But what I've given you is the KISS plan, a plan to follow as you grow with the software, as you learn to read the indicators. I've given you the high probability trend trade checklist with the pictures of what it means to have your rules met. I have given you a PDF with my the PDF of my PowerPoint that I use to teach every day. I've given you the chart reading 101 so that you can fill out the spreadsheet that has also been dropped in the room. I've given you the daily goals so that you can remind yourself that the goal is to get paid and it doesn't take a huge payday to make a lot of money over the course of the year. And I've given you that exit conditions, the one that says, hey, if you're in a trade or if you're thinking about trading, you have to know why you're going to enter and why you're going to exit. And you know, the one part that I didn't share on this that I'm going to do real quick. So if I'm in a high probability trend trade, I know what it takes to get me in. I have the KISS plan. What's it going to take to get me out? Well, initially, the KISS plan rules. Because I don't know how to read charts. I'm still learning how to do stuff, so I'm keeping it super mechanical. As I grow with the software, so will my management, and these are some ideas that might get you out of a trade as well. And then if I'm in one of those 50-50 trades, not only are the entry rules different, but also the exit rules. And if I start taking momentum trades, I have to learn another set of rules for entry and exit. And if I add an HVA trade, I have another set of rules for entry and exit. So guys, simplicity pays dividends in the beginning. Keeping it as basic as you possibly can in the beginning will open the doors for you to take more trades. And guys, this KISS plan came to be. I don't always share the story, but I will. I had a gentleman call me once, and he said, Mark, oh my gosh, I can't find a trade. You know, I see all these people in the room posting winners. I see all these people in the room making money. I see all these people in the room doing great things. And Mark, I can't find a damn thing. And I said to him, I said, well, what are you looking for? Tell me your plan. He goes, I'm trying to make money. I said, yeah, I get that. We're all trying to make money. But what trades are you looking for? He goes, well, sometimes I'm looking for a high probability trend trade, and then I'm looking for the 50-50 trade. And I've got a momentum trade that I look for, and then I also have a high volume area trade that I'm looking for. And then I've got a counter trend trade, and I've got one that utilizes that gap theory that you talk about. And I got a trade that says if I get a divergence from a fib and blah, blah, blah. And he gave me a list of like 10 things, guys. And the only thing that he could find between his accumulation of 50 different rules for entry was the losers, because he kept confusing things. And I said, let's try something crazy. Let's only look for the high probability trend trade and the 50-50 trade. And let this be it. Give me 5 days committed to looking for the best of the best. And tell me how you're doing at the end of the 5 days. And at the end of the 5 days, he was up at about 85% winners. And then suddenly he could find all the trades that he couldn't find. And he was calm and he was confident. And guys, I'm telling you right now, simplicity in trading. The most successful traders I know take 1 or 2 types of trades. That's it. And it's more than enough for them to reach their goals. More than enough for them to reach your goals. So that's where the KISS plan came from, guys. It's rooted in not only 27 years of Nexgen teaching people to day trade, but it's rooted in a lot of study, not only by me, but also from the users. So make sure that you're really focused on it in the beginning. And if you have any questions about any of it, it's your job to raise your hand. The one thing that you don't have so far, and I told you I'd give you everything that you needed, right? I told you how to read the trigger lines, to define the trend, to make sure that you have momentum. We talked about all the entries, the termination conditions, all that stuff. I gave you rules so that you could become a chart reader. I gave you tools to study it, not only the individual parts, but also the whole trade. I've given you the path of least resistance to get where you want to be, ASAP. The only thing that you don't have now, and the hardest thing for people to give themselves, is a little bit of grace as you learn something new. Guys, it's going to take you a little bit of study. It's going to take some effort. It's going to take some feedback to make sure you're reading things right. That's on you. And I'm going to say that real loud, because anytime people struggled in this room, I took it very personally as an affront to my teaching that I wasn't doing a good job. And what I realized is that I can't make you guys follow the path. I can give you everything that you need to be successful. I need you to study it so you can become successful. Can I explain the yellow box? When doing 5-1 trend trades, you will see the 5-1, you'll see small triggers cross down but remain located above the triggers. Without the cross down and price pullback to support, you would never get a fill for long trades. So this is not a look that should worry you. So Hong, what this is telling you really is that the large chart defines momentum. And while you might let something like this talk you out of the perfect trade, momentum is defined on the large chart. And it's this little loss of momentum on the small chart that gets you back to the perfect entry. So this picture reminds you, don't worry. The large chart's leading the way. Does that make sense? That's really what this is telling you. All right. Narayan, you know what? It's okay to be confused. So let me do this for you. And I'm gonna turn it and put it back a little bit because I haven't seen a lot of questions just yet. And I've talked about the same thing every day. Whoops. Sorry, wrong one. Let's go through them individually. So, Mr. Dual, This is the look for momentum. This is rule number 1. And I'm just going to ask point blank, are you comfortable with the idea that when the small triggers are above the large triggers and there's space between the two, this is rule number 1 being met in an uptrend. And this is rule number 1 being met in a downtrend. And I'm doing this very specifically, and this is for everybody, guys, because rule number 1 leads the way. Rule number 1 is taught through one picture because rule number 1 is just one look. Are you comfortable with this look? And it's okay if it's a no. Okay, cool. So once you have momentum, once you can define momentum, well, the next step is to understand the clear path. And if it takes you a minute or it takes you a month, understanding momentum is always the first step. The second step is making sure you have a clear path. And again, this is going to take some study. So the first thing I do is I provide the rules for what it means to have a termination condition. Well, it does. And why does it change fast? Because you're not used to looking for it. But this is your large chart. And I want you to see something. From 8:13 a.m. until 9:50, you had strong triggers, you had weakening, and then you had weak. So really an hour and 40 minutes. And then around 10:06, we got our first look at momentum down. And we are where now? So we have 9 minutes of the exact same look. But what happens, until you're really comfortable with what you're looking for, you start focusing on a lot. So let's do this on the most current bar. And let me just make this huge. Do I have momentum on the large chart? Are my small triggers below the large triggers? Are they wide? Are they angled in the direction of the trend? Is there space between telling me that the... Perfect! So you're actually further along than you think. You've already got 33% of this figured out. But what happens is, as we start looking for momentum, we try to put everything else in play. And trust me, I know this because I've done it. So momentum is done. Let's check it off the list. You've got the look. You know the look. Now you just have to get so stinking good at the look that it slows the market down for you a little bit. And it will over time. The more confident you are with these rules, the slower the market appears to move. So now we have to determine whether or not there's a clear path. And the clear path rules are always the same for termination conditions. And here's a look. It's always the same. If price reaches a line and the triggers remain below resistance, it's a termination condition. If price reaches yellow 1-to-1s and the triggers remain below, it's a termination. The recipe is always the same, ladies and gentlemen. If price reaches a divergence high and the triggers remain below, it's a termination. No long trades. That doesn't feel too hard, right? Now, if I'm trying to turn these pictures into a trade, holy shit, that's a lot to think about. But if all we're doing is saying price reached a line, the triggers remain below, I shouldn't trade into that line. Does that simplify it a little bit for you? And then those are at highs. What about lows? Does it happen the same? Of course it does. If price reaches a line and the triggers remain above, it may create a bounce. It may create a fight. No trades into that line. And it really is the easiest way to begin to recognize termination conditions. Are you with me so far on that? We're not talking about trades. We're not talking about entries. We're not talking about exits. We're not talking about really even up or down. What we're talking about is not trading into a line. Tracy, absolutely you're going to look for a clear path on the large chart. The large chart leads the way. So there's a very simple recipe. And I try to do this by breaking down each rule individually. And then ultimately, you're going to turn it into a trade. But first, let's figure out the very simple looks. So I'm working on termination conditions. And I'm not sure about them yet. So I'm going to go to my spreadsheet and I'm going to look at this termination condition section. And let's go through a few of them. And guys, this is what the class is. And I promise you, you can't ask too many questions, but it's important to me that you understand it. So notice not only that we talk about the look, but we also talk about the rules when you go to this spreadsheet. So price reached Fibonacci support. All the triggers were above. There's an arrow right to it. No short trades. This is a term. No clear path. And then I threw in thank my lucky stars, look at the bounce. So that's a recipe for a termination condition. I'm going to go to the next one. Oh my gosh, look at all of these termination conditions. These are all termination conditions because price reached the area, the triggers remained above support, below resistance. And here's a visual of termination conditions 1, 2, 3, 4, 5, 6 times. So all we're doing is we're committing this look to memory and we're saying to ourselves, hey, anytime price reaches a line and the triggers remain above support, here we go again, there it is in the moment, the path isn't clear. Does that make sense? We put so much pressure on ourselves to find the trade. But what the easiest path is let's find the advantages. So let's define momentum and let's make sure we commit to it. And then let's use that very simple recipe for Fibonacci resistance. Price reaches resistance, triggers remain below. This is a term, rule 2 not met, not a clear path. Does that make sense? Does that help a little bit? And man, I tell you what, I try to make things difficult. My brain automatically makes things difficult. It's just how it works. I don't know why. I'm some sort of Yahoo. And then Tracy, I'm kind of working yours into there as well. And Pete really summed it up. The large chart's slow, guys. The large chart's this big, broad stroke of a brush. Let it do its job. Let it define direction. It's either down or it's up. Let it define momentum. It's either strong or it's weak. And then let it define those lines. The 13.2 is the large chart. Absolutely. It's the slow chart. And if price reaches the area and the triggers are below, sit on your hands. And if the small and the large get above resistance, guess what? Your path is clear until you reach the next one. And all of this happens on a big, slow chart. And then Pete said, one of the best things that you could ever say. Until you have momentum and a clear path, guys, don't waste your time on the small chart. Don't waste any effort on a smaller, faster chart. Don't let the small chart talk you into trades where there are not advantages present. So, small's below the large, momentum is there. Do you see how we reach support but the triggers haven't broken? This is a large chart. This is 13.2. So I just had to pause. And I don't let the small chart talk me into nonsense if the large chart doesn't say go. Does that make sense, Tracy? Does that help a little bit? Let this one lead the way. So what has to happen, guys? My small triggers have to smash through here real quick to even give me the potential to break. I've already got 2 divergences. If a third divergence prints, I definitely don't want the short. That's a termination. This chart will talk you into nonsense, guys. This chart is that siren song. Don't worry about this chart until this chart says go. I am too, Tracy. And one of the realities is everybody learns different. Some people have to see it. Some people have to hear it. Some people have to do it. I'm the kind of guy that has to get punched in the mouth 10 times before I shut up. It's just the way I am. I'm stubborn. I'm opinionated. I know that I am. So let's look at this one. Do I have momentum? The smalls are above the large and everything is green. What do you think? Narayan. Smalls aren't below. Everything's red, but my smalls are on the wrong side of the large. Do I have momentum? No. Perfect. You got this. And then I can just stop, right, Tracy? I don't have momentum. F it. I'm going to wait. I'm going to wait for odds favorable momentum. And it doesn't matter what's happening anywhere else. Look at that small chart. The small chart tells you to go short, doesn't it? Large chart doesn't have the rules met. And it might go down, but that's not my best chance of success. It takes some practice, guys. It takes some practice. All right, hold on. Hong. All right, Hong. I got rid of the colors. When price reaches the white line, where are the triggers? They're above, right? Don't trade into that line. When the small triggers smash below the white line, but the large triggers remain above, that's a 50-50. It has nothing to do, absolutely nothing to do with the colors, Hong. It has everything to do with trigger location. And that's why every day when I talk about the options for termination conditions, every day when I go through and I show you guys this picture, where's it at? I never talk about the color of the fib. I always talk about the trigger location. Does everybody get that? It's trigger location. It has nothing to do with the colors. This one turned blue, Hong, and it never broke. This one turned blue when there was only the potential to break. Does that make sense? Everybody, not just Hong. Don't get hung up on the colors, guys. Focus on trigger location. Trigger location tells the story, not the colors. Jeffrey, I love that you say, oh yeah. I don't know why I like that so much every time. Hong, does that make sense? Even though this fib is red, my large triggers are still above it. Who cares what color it is? Hell, we could just make it something pretty. There we go. I'm a child of the 80s. I love hot pink. Let's make it hot pink, right? Let's let the trigger lines define. Great question. Awesome question. So, for those of you that are feeling... always loud, I love it. For those of you that are feeling like, oh my gosh, this feels like a lot. I'm going to throw this out there because I used to be a personal trainer in a different life, guys. And I want to share one of the things that helped me find the most success. And you guys have probably heard this, manageable goals. Let's make this bigger. All right. Whoops. Home 24. All right, guys. I want to lose 50 pounds. That's overwhelming, guys. That's huge. That's scary. That's easy to fail. Does that make sense? I want to lose 1 pound a week this year. I'm down 52 pounds end of year. Manageable goals. And guys, this is such a big thing. So you can say to yourself, I want to be a day trader. That means you have to make money now. Or you can say, I want to learn to read my charts. Rule 1 first, then 2, then 3. Then suddenly, I can find trades. And that becomes easier. Smart goals. That's it, right? Specific, manageable. Guys, stop trying to make all the money and don't beat yourself up if you're not. Learn momentum. And then once you're comfortable with momentum, pair that up with an understanding of termination conditions. And then once you can do that, find your entry. Stop putting the pressure on yourself to know it all on day one. And believe me when I say this, stop putting the pressure on yourself to know it all on day one. Guys, if you spend 5 days in this class, you know that it works. You know that the patterns repeat themselves. Now you just have to learn the patterns. So if the fib color doesn't tell if the trend will continue or be a bounce, no. And Hong, you'll never know if it's going to break or hold. But what you do know is that if the triggers don't break a fib, no matter what color it is, don't trade into it. And Hong, it kept you out of a short trade. It kept you from going short here. And it didn't matter what color it was, and it didn't matter what time frame it was from. But price reached the area and the triggers didn't break. Does that make sense? This fib has gone from blue to red to blue, and it never broke down. Isn't that crazy? Weak triggers, anything can happen, and it went down. Resistance broke, it came back, it behaved as support. Happens all the time. You guys gotta keep it simple. Price reached resistance. Triggers are below. Does everybody see that as a termination condition? No matter what color the line is. Does everybody see that price reached a horizontal line on my large chart? My triggers are below it. Absolutely no trades into that line. Can you give me a why if that makes sense, guys? It really is that simple. And it's crazy how we try to make it more difficult than it is. It happened here, and it happened here. My larger red, my smaller green. Do I have odds favorable momentum? No. I don't have momentum or a clear path. And the market is defining the range that it needs to break out of. We all do, Joel. So no matter how tempted you are, look, Mark, there's a pink mid-band right there. I'm supposed to go short. The hell you are, Tracy. You don't have advantages, brother. Or sister. I'm not sure which it is. Isn't that cool, though? If you just let go, if you just allow it to be simple, guys, focus on momentum and clear path. Brother, thanks for that, Tracy. I've had friends on both. I love that it can be simple. And I also love that we make it difficult. We don't have to, but we do. I do. Don't be like me, guys. This class is taught from all of my failures and how to fix them. True story. Everything I have ever broken, I've learned how to fix. And I teach it to you guys before you break it. But I'm not going to lie to you. You're going to have to break some things to get good at this, which means you got to show me what you're breaking so that I can teach you how to fix it. That's all I ask. All right, guys, I'm going to take a break. I'm going to take 5 minutes because my mouth is dry. Go stretch your legs, guys. Looks like that termination condition's the one that seems to be working. Should we watch it for a second? My triggers aren't through the area yet. My small triggers, me too, Joel. My small triggers are trying to break below large, but they haven't. My triggers haven't gone through the fib. Do I have momentum and a clear path yet? Not yet. But what I can do is say if this market continues down, if it gives me odds favorable momentum, my path will be clear all the way to the next area. Perhaps I'll look for an entry at an area inside of favorable large triggers. But until that happens, guys, I have weak triggers at a fib. This is the look when these fibs hold more than they don't. Do you see how the triggers didn't break, Hong? Both smalls and large never got below. No trades. Relax for a second. Let's see what the large crowd does. Tracy, does that make sense? Narayan, does that make sense? Price came all the way down to Fibonacci support and the triggers didn't break. Let's sit on our hands, guys. And this is where I got frustrated as a brand new user. Because from 10:22 to 10:35, guys, that's 13 minutes. I would say, damn it, I don't have a trade. This sucks. I'm going short. I'm going long. I can't make money if I don't get a trade every 12 minutes. And you got to be patient. You really do. So, true. Don't act like you haven't been there, guys. Crude since the open, right? Just not given opportunities. Termination reverses the market, giving us momentum. Right back to the mid-bandit triggers, right to the top of the triggers, to the top of the triggers. Maybe an opportunity in there somewhere. So guys, I'll see you in 5 minutes. Go stretch your legs. When I come back, we'll look at all the charts that have been posted. We'll answer all the questions that get posted, guys, and we'll just keep doing this, and we're going to have fun with it. I'll see you in 5. Maybe so. I'm going to go through them slow, and I'm going to try and turn every picture into a lesson. This is, I think, the most important part of what we do is the feedback, talking about what you've done. So Steve Diego identifies his trigger lines, and he says, Guys, these are strong. This is a strong trending market. Over 30 bars in the same direction. He has absolutely nothing in the way. And he says, gosh, in a strong trending market with no key areas, I can just kind of hop in and get paid at treble. And guys, that was 34 seconds, $200. And this is 100% based on clear path. Steve Diego, outstanding. And then Rob, let's see what we got. Marked pullback areas on 5-1, had odds favorable momentum, but into a termination condition. So now you wait. Outstanding, guys. This is how you get to where you want to be. Rob's like, man, look at the momentum. This is awesome. Life is good. Son of a gun. Termination condition. This could stop the market. Rob, absolutely beautiful chart read and great job taking pictures. And then you let it clear and it becomes an easy one. Rob, this is 2 days in a row, brother. You are absolutely killing it. Showing patience, and then when it's good, taking advantage. I'm so proud right now. Rob, do you feel like you're turning a corner, brother? Because I feel like you are. I feel like it's starting to click and you're calling your shots, man, and they look good. Great job. Pete says, check it out, guys. Not the best big chart look, but trend was up, 50-50. Fib termination condition was his target. So he's looking right here. Everything says up. And Pete says, you know what? Let me take a pullback right to the area, right in the triggers, and let's see if we can't take this momentum up to the next key area. And this is absolutely beautiful. And guys, this is a very low risk trade. His stop, he was in at 41. His stop was maybe 35, 6 ticks, 7 ticks. And it was 4 ticks once it went up. And it was pretty easy. It never blinked all the way to fibs. Pete, what a great trade, dude. What a great trade. Momentum leads the way, guys. Momentum leads the way. And believe it or not, that is damn near all the picks. Shadow picks. Much better charts. Thank you for that. All right. Odds favorable momentum. You got in before the termination condition when it had potential to break. Right there at the low end. Price goes below. You take the pullback right to it. You have room to the next fib. And you are hoping the fib breaks. Oh, shadow picks. So let's talk about it. You were in at 66 and you had a giant fib at 48, right? That's $180 per contract. Hold on. We're going to do this. That was 180 times 6 to get you to the trouble area. And you didn't believe it. You didn't believe that fibs could stop the market, and it didn't work. Does that make sense, everybody? You will understand where the market is likely to go. These are great profit targets, Shadow. Great profit targets. And there is nothing worse than giving it all back. Just get paid at those blue lines. Pete took the same trade. Normally wouldn't take this with fibs on both charts, so he did it in sim, had 2 out of 3, big momentum, 50-50. Low area, knew where the stop had to go, and takes it down. Guys, I'm a huge fan, and you don't have to trade like I trade, but you know that these lines have the potential to stop the market. So for you guys that are working on termination conditions right now, Narian and Hong and Veronica, if you're still in here, and George Liu and Shadow Picks, and all you guys, are you starting to see that these lines are great places to get paid? That these lines are awesome places to just get paid and wait for the next trade. And the one thing that we forget, And when I say we, I'm keeping myself in the mix on this one, guys, is that you're going to be so good at picking entries. You're going to be so good at picking entries that you will find the next trade. You took picks and boom, got you. You were going to close trade. Too late. Should have just set your profit bar. Amen. Because what this says, when you put profits on the other side of Fibonacci, this is all caps shadow pick. I hope. I want. I wish. Gee golly, won't it please, right? We're better than that, guys. Get paid. And if you want to put one on for a runner, you know, make $1,000 at the fib. Put the other one down here just in case it breaks, guys. But leaving your entire position on into a termination condition rarely works out. Exhibit A, 4 contracts off from 69 to 49. What an awesome trade, Pete. And what a great lesson. What a very timely lesson right behind Shadow Pick's picture. So, guys, I'm never going to beat you up about your trades, but what I will do is say, hey, let's think about this for a second. Let's see, is there a way to do it better? So, Shadow Picks, don't know if my feed was stalled, but jumped several bars up and stopped me out. No. Sometimes it's just, it happens, right? But which direction were you going? Were you in a long trade or a short trade? And where did you get in? So you were in a short trade with no momentum, no clear path, no areas inside of favorable large triggers. Shadow Picks, you were like, you know what, mofos? You're going to give me my money. Because I'm Shadow freaking Picks. Look at that. That would have been such a nice exit. Been there. I've been there too. Get paid here and then do nothing when there's nothing to do. It's okay, Shadow Picks. This is part of the learning curve, right? We get so excited when we luck our way into a couple grand that we think that we're invincible. And we start taking chances and we start holding for bigger moves. I've done it. I've done it so many times. You're better than this. You will be better than this. If you're not already, you'll be better than this. You'll get to the point to where you say to yourself, there's no way I'm going to hope. I'm going to get paid. And this is just experience. You have to watch a line create a bounce enough to make you not want to trade into that line. And until you do this 100 times, you're going to keep hoping that it breaks. And not you specifically, Shadow Picks, everybody in the room. No, this isn't your failure, man. This is your lesson. Don't confuse the two. Don't confuse the two. A failure would be not wanting to learn something from the lesson. A failure would be not taking the time. I know. I was an English lit major, though, and I'm a huge fan of language. My failure is not following my rules. I think that's most people's. All right. I don't even know if I should be posting this because this might be one of those get lucky trades. Goals met on a 6 lot, though. So you went long. Everything said down. You went long. And you made money. You can post it, Andy. But do you know what one of the things that you've stopped doing on these crazy freaking counter trend trades is you've stopped writing rules. You have 100% abandoned the idea that you should write why you got into a trade. Everything says down. You have a metric shit ton of information going on here that says down. Everything says down. Nothing says up. And you said, you know what, to hell with it, I'll go up. And it worked. And I'm not anti-Andy trade at all, Andy. But what I want you to think about, just for giggles, what I want you to think about is I want you to go back and I want you to chart read. I want you to pretend, Andy, that you're teaching this class and you've got to find a way to justify this trade. And let me show you what I mean. I'm directly into a midband. Might create a bounce. I've got one-to-ones with divergence. Might create a bounce. I've got a pivot stop out at one-to-ones with every trigger above it at a midband. Might create a bounce. Where is that bounce most likely to go if it does? Right back to a midband at triggers, right to those synthetic triggers. I'm going to see if I can capitalize on that tiny little move between the bounce point and the continuation for more down point. Does that make sense, Andy? So now I'm not just saying, holy shit, I got lucky. This is amazing. I love this. I'm saying, let me break this crap down so I can make it repeatable, so that I can put it in a plan, so I can go back and study it. And guys, this is how plans come to be. There's a fib, right? Could create a bounce. There's another divergence. Could create a bounce. Where might it bounce to? Up to synthetics. Don't really have a long trade anymore with weakness in no areas inside, but two divergences sure might give me a bounce. So I'm not against that trade at all, and Ron is totally high-fiving you because Ron did exactly what I talked about, Andy. So what you have to do, and it's okay. It's okay if you don't know how to say it in my terms. Say it in your terms. Just like verbal vomit. One of the things that we used to do, taking a lot of creative writing classes, is you have a blank sheet of paper, right? And you just start going, Andy. I hit a midband and I saw fibs, and it doesn't matter if it's spelled correctly or not, and multiple divergences and synthetic away, and just going crazy. I know, I'll get it, but I told you guys I was going to turn all these into lessons. This is how we create plans. And Andy, I just happen to have your chart up. I can do it on anybody's. And I know from high probability trend trades that a pullback to an area is a short. So I can take this pattern and create the long to get to the short, right? And ladies and gentlemen in the room, Andy, that wasn't for you anymore. You've already gotten your lesson. This is how you will develop a plan outside of the most basic plan. And Hong, I know he went long, and that rhymes, so you know that it's good. See where it says entry? There is a blue tick, a blue arrow on the left side of the bar. So anything on the left side of the bar shows entry. Anything on the right side of the bar shows exit. So I know he went long. The entry was at 57.89. I can see his first target right there in the midband, right? Andy, it's brilliant. What a great target. And then he wasn't willing to lose, and there's his second exit because he knows everything says down. And it's a little jumbled here, but Andy, I think you crushed this trade. I think you got lucky because you don't know why you took it, but I think you could turn that into a pretty solid plan. Steve Diego, NASDAQ, everything says up, everything is flying. You jump in and you get out right before trouble. These don't look like they match. Oh, you got in out before the pullback, and you chose not to take the high probability trend trade. Do you see that one, Steve? You're so focused on the little hits, and you did it perfect. You missed the trend trade to get up to the fib with all that momentum. I've done that. This is where when you have a lot of things going on, sometimes you'll miss an easy one. Strong bottom, 50-50, no divergence, 2 ticks above support, stop where the market shouldn't go. Both targets hit while annotating. Morgan, what a solid plan. Great annotation. Makes it repeatable, right? Termination reverses the market. Odds favorable. Do all my new users see it? Smalls above the large, larger wide. Space between, I have strength. I have the potential to break, so he calls it a 50-50. And once he says 50-50, Morgan's brain says, wait a minute, I need no divergence because that's the best look on this trade. And if that happens, I'll get in 2 ticks above the highest point of support inside of favorable large triggers, and I'll get paid at 100 and 200. And Morgan, freaking amazing. And this is the picture, guys, that you should steal. And you should go to your spreadsheet. And you should go to your favorite looks. I'm going to put it in my favorite looks. And look at this. I'm going to put it behind another one of Morgan's trades in there. Morgan's perfect 50-50. Ta-da. And now I can go back and study that if I ever want to figure out how to take a 50-50 in the best way. And then Pete says, yeah, I believe in it. You do get all 3 rules for the high probability trend trade that will make you money. Momentum, potential to break, Pete. Entry at the area. Easy money. Great trade. Both of you guys, great trade. Jen, are you going to show me the same thing? Oh my gosh. Jen, why on earth are you waiting for confirmation on this look? Strong bottom, 50-50, odds favorable, perfect pullback to areas inside of triggers, and you shortened your distance to trouble by an entire bar. Guys, there's a time for confirmation. That's a 50-50 trade, right, Jen? Let's go through it real quick. I think you're confirmation happy right now. So just for grins, we're going to do 2 things. I'm going to take that picture. And Jen, this isn't just your lesson. This is everybody's lesson. You are confirmation happy right now. All right. So, guys, this is for everybody. 50-50 trade. Do you have a strong top or bottom, Jen? You said you did. Nice job having a strong bottom. Jen squats. There we go. Odds favorable momentum? Absolutely. Hold it. Small's outside of the large on the small? Without a doubt. No divergence on the 5-1? Don't see any. And then, Jen, the one thing. Enter at the area. This is the absolute, positively best of the best way you could ever take a 50-50 trade. And one of the things, Jen, is that if it is going to fail, waiting for that confirmation gives you a bigger loser. But getting it at the area gives you virtually no risk, and it doubles the profits directly into the fib. Does that make sense? And guys, I hate beating y'all up. And one of the other things, hey, Shadow Picks, are you in here? You gave back $80 here, and you gave up $70 here. You don't feel beaten up? Man, I got to get better at this. It did bounce there, didn't it, Hong? It bounced right off of that fib. 100%. But did you notice that it didn't reach that fib yet? When she entered, she had room to get to that fib. And that's where understanding the language, Hong, in order for it to be a termination condition, the first thing that has to happen is price reaches it. And if price doesn't reach it, this is a target. And look where she got paid. Right at the fib. And then Hong, you knew that it could create a bounce. Jen didn't believe it, and she got stopped out and gave $80 back. There you go, Jen. Did that feel like a beating? Does that make sense, Hong? You're absolutely right. The fib can cause a bounce, but she traded to the fib, hoping for the next fib, smoking hopium. It's fun on the weekends. It clouds your judgment when you're trading. What is the whole number that you're talking about? Help me with that. When you say whole number, I'm assuming this is left over from something that you've done in the past. Possibly. I could be wrong. So watch this, Hong. Let's do this. The distance from the lowest point of support to the fib that can create a bounce. So the fib is 99 and the entry is 79. So from 79 to 99 is $200 worth of profit. Does that make sense? Now, Hong, if she jumped in at 93, it's only $60 worth of profit. But because the correct entry is that the area inside of favorable large triggers waiting for the pullback increases the profit potential to 200. But Jen didn't believe this was the best of the best trade, so she got in and turned it into $100 worth of profit. Does that make sense, Hong? And I'm not sure what whole number. 110. Jen. 110. And Hong, this is one of the things that it takes a little bit of trust in the pullback to start getting good at. And this is a good example too. So from the top of the bar where the pullback starts, Hong, is only $80 to the trouble in the distance. But from the entry, it's about $320 to the entry. And this is one of the reasons why we talk about those pullbacks to the areas. It reduces the risk because the stop has to go below the triggers, but it increases the profit potential because you've increased the distance to the area that could create a bounce. I think you just had an aha moment there. Good stuff. Can you mark this picture? I sure will. You meant this picture, right? Yeah, for sure. So let's do it. This right here, Hong, is where we decide to take a trade. This is where price is, 97.05. Does that make sense? So from the top of the bar to trouble is 8 ticks. We'll call it $80. There's $80 worth of profit between the top of the bar and potential trouble. If I take the pullback, whoops, that's not a pullback, that's text. If I take the pullback to the area inside of triggers, well, now my distance is from 83 to 13. And that is $300 worth of profit. So this is why every day we talk about pullbacks to areas inside of favorable large triggers. And then I'll do it this way. To the fib was this far from the top, but it was that far from the entry. And the risk is way lower, Wayne, because no matter where I enter this trade, my stop goes below the triggers until I get the reversal bar, and then my stop goes 2 ticks below the reversal bar. Does that help a little, Hong, with the visual? And actually, I think in the spreadsheet, there's this, hold on, term or target. This was a good one, and it's from the same question. So in order to decide if an area is a target or a termination, if price reaches and none of the triggers break, this is a termination condition. But if it's off in the distance, if price hasn't yet reached, well, it's a target. And that's in your spreadsheet too. And then by selling and buying the pullbacks, we increase the distance to our target. Man, I got a lot of stuff open. All right, guys, so here we go. I had odds favorable momentum, right? Does everybody see it? Odds favorable, clear path, beautiful, right? Large chart is perfect. Does everybody see it? It looked like this. Isn't that an awesome look? Hong, do you see it? Cool. So what do? We wait for the reversal bar, right? At the time of the reversal bar, from the bottom of the triggers to the top of the triggers. But more specifically, from the lowest point of resistance to the highest point of resistance inside of favorable large triggers. Can you give me a why if you see that this is the point where the market is most likely to continue? If this trade is going to continue down, it's most likely going to happen from this point. Does that make sense, everybody? That is rules 1, rules 2, and rules 3 in play. Jeffrey sees it. Hong, does it make sense? Nope. If it's going down, what do we do, Hong? Do we sell or do we buy? Sell, absolutely. So your order, Hong, is right here, 2 ticks below. This becomes your entry for the highest probability trend trade. Make sense? 2 ticks below the lowest point of resistance. And the cool thing, Hong, is that before you ever get into this trade, you know that your stop goes about right here, where the market shouldn't go. Because if these guys are capable of pushing past the triggers, if these guys are capable of pushing past the areas, that's the point where you no longer want to be in the trade. Does that make sense? Cool. So when you get that one DL and you can't get it to fix with reloading data, how many days back are you? 10? I would probably rebuild the workspace. You could try F5 and reload NinjaTrader script and see if that works. But if not, you just rebuilt it. Brand new, brand spanking, huh? Disconnect from your data. Go to Tools. Go to Database Management and reset and repair. And then you'll have to reboot Ninja. That would be the next thing that I do. Did all of that? So when you rebuilt the workspace, did you go in, just to make sure, sorry Hong, we're not done yet. I get distracted sometimes. This is one of those times. Okay, but did you go through and did you delete all of the templates in chart? Okay, and you went through and you deleted all of the workspaces, right? NinjaTrader 8, workspaces, you got rid of all of these. So delete templates, delete workspaces, and then the final question, did you go back to the resource page? No, that's 8. Okay, so delete workspaces, delete templates, and rerun the indicators. That's probably what's going on with you right now. And this typically fixes it. And just in case, here's the instructions. I know we hate these as men. But 99 out of 100 times, this sets me right. There you go, man. All right, sorry about that, guys. So Hong, we've got our order in. We know exactly where we don't want it to go. The large chart leads the way. And here it comes. And Hong, you are in a short trade. You sold the market, right? You're welcome, DL. And from here, we expect it to go down. We expect it to continue with the trend, to continue with the momentum, to continue with the clear path. We know that more often than not, that's the most likely outcome. Right, everybody? You good with that? I have all three advantages. I can't find a thing wrong with this trade. I've got the perfect entry. My stop placement makes sense from 25. Like everything has lined up and the heavens are shining and the children are singing and life is good. Hong, are you with me so far? New folks, are you with me so far? It just keeps going. And it just keeps going. And we just lost a trade. Does everyone see it? That we just lost. We just took a loser. Veronica, you just lost a trade. Jen, you just lost a trade. Morgan, you just lost a trade. Wayne, you lost a trade. Muser lost the trade. Rob, you lost the trade. Temper, Joel, Troy, Narayan, you lost the trade. No, this was a clear freaking path, Andy. That was your stop. This was a clear path, 100%. Coming from a termination condition. The highest probability trend trade that Nexgen teaches. A trade that typically wins 70 to 80% of the time. And guys, we lost. Was it a bad trade? What do you think? Was it this one divergence that killed the trade? How many does it take to kill a high probability trend trade, ladies and gentlemen? How many divergences? 3, right, Kurt? So it couldn't have been this divergence. Hold on. Then it had to be that the small triggers rolled up, right? Hong, we learned this lesson earlier today. It had to be that the small triggers rolled up against the trade, right? That's what made us lose. What do you guys think? Do you guys want to know what the real answer is? The buyers won. That's it. The buyers won. The buyers didn't send you a message to say, hey, guess what? We're going to unload on this trade. The buyers didn't tell you where they were getting in. The buyers didn't tell you they were going to fund it. The buyers won, guys. You took a pattern that wins more than it loses, and this was one of your losers. And you have to be okay with that. But here's the deal. That was a pretty small loser. It could have been a lot bigger, right? If you started to incorporate hope. If you started to incorporate wishes, if you had started to incorporate your own thoughts on it instead of what the indicators were saying. And I love this lesson. I love this lesson for everybody. Learn to trust the pattern so that you take the trade without hesitation. Andy, odds favorable from a strong bottom, 50-50. Once again, you're trying to trade like Jen, waiting for confirmation that you don't need. It sure is, Rob. I think. Let me double check 1 second. Waiting for confirmation that you didn't need, hoping a fib would break that didn't break. You see it? Should have been in at the area. That's what the rules say. Should have been out of the area. That's what the rules say. That's okay. You know it's the right trade. Now you just have to refine it a little bit. You got to learn to trust it. It's a beautiful trade, Andy. It's just a trade that could have been done a little bit better. 11.24, Rob. 11.24. Ron says, I wait for price to clear trouble with odds favorable momentum. Ron says he's going to take quick profits and pay for my golf. Thanks, Ron. I love it when you guys send me green fees. Great trade, man. And Andy, yours was a great trade too. And I don't know if you were in the room when we did it. You were probably like, damn it, he's going to say this to me too. We actually put the best of the best scenario for entering at the area on Jen's trade. She did the exact same thing as you. I mean exact. Catching it on the way up and hoping the second contract breaks. I mean, you guys mirrored image there. Which is great news for Jen because you're really smart. And it's great news for you because Jen is really smart. So it works out. Jen's like, Mark, let me show you how smart I am. 50-50. Divergence prints. Didn't take the trade. I love it. Not a strong bottom, Jen. Right on. Chasing, not confirming. Not a strong bottom, Jen, because the small triggers did make it through. And one of those, the precursors for a strong top or bottom, is that they don't get through at all. And there the smalls gave a little false hope that we might go down. And then divergence, especially from a 1-to-1. I love that you didn't take this trade. I love that you didn't take this trade. That one is more likely to win more than, or to lose more than it wins. Great job. Guys, taking pictures when your rules aren't met is another way to get really good at your rules. True story. Ron, if I hold my breath for that, I'm going to end up dying before you get me greens fees. And on that perfect trade that didn't work, guys, it looks like they wanted it to go down, but the buyers maybe had some profits to take. There's that fight, and it was a good fight. And it just took us out. And now we're right into support. And the triggers, large triggers are up. Small triggers are down. Price reached support. Nothing cleared the area. So guys, is it a long or a short here? Careful what you wish for, Ron. I already told Jen, I said, we're going to go meet him. One of these days, I'm going to come meet you. I got to get my poop in a group here. I got to get back to Austin first before I start traveling. Nexgen meeting in London? I think we should do it in Italy. The weather's nicer. We're going to see if support holds. All right, guys, I'm going to go take 5 minutes. We've gone through all the pictures. So I'm going to say it again. If you need help with a concept, I need you vocal. I need you to tell me what concept you need help with. And Andy, dude, you're there. You're there. I feel like, you know when you've got the kid with all the potential and you feel like you're a little harder on them? When you guys start getting really close, that's where I start pointing out the little intricacies in your trading. Because you're so close that it's minor adjustments that are the difference between huge days and frustration. And it's true. It's true. Right on, Andy. But I do worry about that. Guys, I'll be back in 5. Go stretch your legs. And then we'll finish strong today. Here we go. Final hour. All right, Miss Veronica, let's see what we're doing here. All right, took this pullback, quick short from the midband. In hindsight, I saw the yellow 1-to-1 on the small chart, but nothing in the path on the large chart. So, Miss Veronica, this is a termination condition that reversed the market. That's a strong top. That makes this trade more likely to work. I love this. You've got the small breaking below the large, which you know creates momentum. There's nothing in the way on the large chart. And you said these stupid yellow dots on the small chart aren't a termination condition because termination conditions come from the large chart. The only thing that I would have liked to have seen, Veronica, is in at the mid-band rather than at the bottom of the bar. And then you held it all the way to the fib. Beautiful trade. Nice job. How many options do you have, Mr. Dewall? So when I go to my workspaces, I've got Nexgen Crude, Nexgen E-mini, S&P Futures. I think there's 2 options there. That's the one that I'm looking at, though. There are a lot. My brother does that because not everybody is keeping it super simple. But here, let me give you this picture just so that there's no doubts. These are the 2 that are always open in class. There you go. Does that make sense, Veronica? It's a beautiful trade. But using the area inside of the triggers makes it a little bit easier. A little less risk and a little more room to profits. But you did a wonderful job with this one. Awesome. And that's what we do, guys. We take a trade, we post it in the room, we get a little feedback, and the next trade's a little better. And then we just keep repeating that process until they start to get easy, until the looks start to become a little second nature, until the management begins to make more sense. But the fact that you exited right at a fib, the fact that you knew that terminations come from the large chart, not the small chart, perfect. Absolutely perfect. Nicely done. I love it. Looks like that termination condition's working. No momentum, and I'll be darned. It doesn't seem to be going anywhere. They're just fighting. Neither side could create momentum. And they're doing exactly what I would expect to happen with no momentum. It's like this shuffle. What do you guys want to talk about? This is where we start that awkward silence. Been playing solitaire? Yeah. I play Scrabble. That's one of my favorites, is I play Scrabble. Entries, Veronica? Absolutely. So let's do this one again together. Bum, 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 bum. Why do I play Scrabble? Oh, have fun, Ron. Oh, I was like, I don't know, because I like it? All right, so here we go again. Odds favorable momentum. Right, Veronica? We're going to go through the whole process together. Yep. So what that is a range chart. So that is a market flow range chart, Narayan. That is something that you may choose to incorporate later. but I don't teach it in this room. I will answer any questions you guys have about it, but I don't teach it in this room because it's a little advanced, and until you know your rules, it doesn't do much but confuse you. I actually don't even have them built into my workspaces. I only use the large chart and the small chart. All right, odds favorable momentum, 100%. Do we have a clear path, Veronica, or do we only have the potential to break? What do you think? I'm giving hints. And guys, everybody play along, please. Tracy, Frank, Veronica, Naron, Zach, Izzy got game. Tracy's got it, 50-50. Small triggers are above, guys. It takes both lines of the large triggers to get above before an area is broken. This is why I ask these questions, because it lets me know who might need a little help but doesn't know that they need it yet, right? So Wayne, it takes both lines of both the small and the large to get above the fib before we consider the fib to be broken. Cool. And Veronica, same lesson. You guys know I do this on purpose because when I make it sound really simple, people give me their answer. And then if the chart read needs adjusting, we adjust it. Cool. So I can look for a trade, right? Everything is up. It's strong. Potential to break. I turn my attention to the small chart. And Veronica and everybody else, what am I waiting for on the small chart? What's that one thing that signals how I'm going to pick my area? Do you guys remember? Small chart's just railing up without me. And what starts the pullback, Tracy? Right, Wayne. The reversal bar. That one red bar after all of these green bars. And there it is. So this reversal bar signals the beginning of the pullback. This is the one that says, hey, you know what? Somebody might shove a little bit. So the first thing I do, where are my trigger lines? From the top line of the trigger lines all the way to the bottom line of the trigger lines. I don't like the yellow. I'm going to go slate gray. There we go. From the top of the triggers to the bottom of the triggers. Everybody, this is where the price bars might return. So price might go. I love the word might because there are no guarantees in trading. Price might go anywhere down to this point. It returns to the large triggers. Does that make sense? That's why we circle the large triggers. That's why we look inside the large triggers. But I need something to create a bounce. I need a fib, I need a mid band, I need a yellow 1-to-1. So this is the refinement process, guys. From 87 to 83, that's huge. That's a big range. But from the highest point of support, 85, to the lowest point of support, 84.50, the areas inside of triggers are where I anticipate the bounce to come from. Are you with me so far, Veronica, Tracy, Hong, Frank, Zach? All of it making sense so far? So our job is to right click on the chart and to activate a limit order a couple ticks above that midband. And just say to ourselves, I hope they can push it. I hope they get us. And if they do, boom, 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 congratulations. You're in a long trade. You're in a long trade with the advantage of momentum. You're in a long trade because it's got the potential to break. You're in a long trade directly from the area inside of favorable large triggers. Where does my initial stop go, guys? You remember that lesson? The initial stop is 4 or 5 ticks below the triggers. That's about 12 ticks. It's about $150 worth of risk. Are you guys cool with that? Or should we just jump ship and not take the trade? So there's my stop. I'm in at 85.50. The KISS plan says that my first target is 87.50. Nope, yeah, 8 ticks. That's $100 in the distance, guys. Let's make it green like money. What do you say? There's my first target at $100. I have to make it to $89.50 to hit my second target of $200. Is everybody with me so far? Because now we're going into the management. Great entries create very manageable trades. So you enter just above the area inside of triggers. Your initial stop is going to be down here where the market shouldn't go. Your first target is 100. Your second target is 200. Is everybody on board? Let's see what the next bar does. Aw. Nope, this is this morning around 6 a.m., Wayne. I just scrolled backwards a little bit. All right, guys, so you got a reversal bar in the direction of the trend. Do you notice that it also hit your first target? One bar. So you just made $100. Congratulations. And my rules say that once I hit my first target, I'm going to go break even. So my stop is break even, and I've got $100 in the bank. How are you guys feeling so far? That's not so bad, right? That's a quick $100. And we pinpointed exactly where it was likely to come from. Everybody's cool so far? And this one, that's a $300 trade, ladies and gentlemen. Taken exactly as we teach it in this classroom. 100%. But here's the thing. It kept going. Eventually, you'll figure out how to make more money on these trades. But in the beginning, is anybody upset about $300 over the course of about 2 minutes? And this is what we're looking for. And then how do I study it? If I circle the entry here, I want you to see something. It's the tail on the large chart. Pretty cool, right? So let me circle the tail. I remember this one. This one was kind of ugly, wasn't it? Had those split triggers. But it came right back to resistance. And your initial stop kept you safe. And when they came back to scare you, you were just fine until it went down. So one of the easiest ways to study this, guys, is to just scroll back and look for those tails when the rules are met. Boom, boom, boom. That's a pretty good one there, right? Potential to break. And I told you guys, most of your trades are going to be those 50-50 trades. Most of your trades are going to be those potential to break trades. So make sure you're studying that KISS plan. And this one doesn't quite look like it in the moment. Wait for the reversal bar. Triggers are split. These are the only areas inside of triggers. Right to them, right down. Does that help a little bit, Veronica, seeing it bar by bar? And you guys can do this. You can go back and do this, right? Price reaches Fibonacci support even with odds favorable momentum. Rule number 2 is not met. And it just, the more basic you keep it in the beginning, the easier it becomes. And guys, these are patterns that work on any time frame. These are patterns that work on any market. You're going to find your market. You're going to find the one that speaks to you. I'm going to pull up gold real quick. We'll see what gold's doing. There's a tail right there with the potential to break. There's a tail right there. Let's see if they lined up. What do you say? But Mark, I don't trade gold. That's okay. You can still check patterns. Pulls right to the synthetics. I knew that there were two potential correction points. I knew where my stop had to go. If I waited for a confirmation bar, I got paid. Oops. Right in between. 10:06. Central. Eastern. Okay, that's 10:06 Eastern. What am I looking at? Directly into a termination condition? So let's go into it. Are we coming from a strong bottom or a weak bottom, Wayne? No. That's a termination condition that reversed the market. So Wayne, this is actually a strong bottom. Yep, the 1-to-1. Absolutely. No more short trades into the area. None of the triggers break. It reverses. This is a strong bottom. And because of this strong bottom, this fib has a higher chance of potentially breaking. But let's just go through the whole list. Do you have momentum? No, you do. Separation between the small and large. They're both angled up. That's it. That's strong triggers, Wayne. You don't have a clear path, though. Price reached resistance. All the triggers are below. And you can see it right here. Price reaches resistance. All the triggers are below. So, Wayne, this would be one of those times where if you said to yourself, you know what? Because of this strong bottom, I'll take a shot into this fib if I'll let the small chart be the tiebreaker. And what I will insist on the small chart is odds favorable momentum, because I know that momentum can break areas, right? And if I have it on both charts, maybe I'll take a shot. But I want to make sure I don't sacrifice any of that momentum. So there can't be any divergence on the pullback, because I'm not willing to sacrifice momentum into an area. And then more importantly to me, Wayne, I want to make sure that I've got a relatively low risk entry. You know exactly where your risk is, and you decide whether or not you're cool with that. So is it the perfect trade? Absolutely not. It's directly into a termination condition. And guys, this is one of the times, not everybody gets this reference. Not everybody had my upbringing. Wayne, this is a bar fight. And I don't know if you've ever been in one. A termination that reverses the market is the captain of the football team. Odds favorable momentum is the center, and he's been drinking. Perfectly defined entry is the rest of the rugby team. And they're all liquored up, right? And then the captain of the chess club says, hey, I'm about to whip some asses. Are you still taking that fight and feeling good about it? And that's kind of one of the things, guys, and this is what trading boils down to. Do I have an advantage? Do I have enough going right to make me willing to take the chance against something wrong? And Wayne, this is one of those times, because of the strong bottom, because of the momentum on both charts, because of no divergence, because of a clearly defined entry, yeah, I feel pretty good about that. And nope, Tracy, you cannot see divergence before the line prints. You can see the potential for divergence, but divergence is only true when the line prints. So right now, it has the potential to get pregnant, but until that line prints, it's just potential. Does that make sense? And then, Narion, which line are you saying you're missing? And one of the things that I hate to admit more than anything else in this room is I'm not the best tech guy. And one of the things that I would encourage you to do, guys, if you feel like something's not right with your chart, first show me a picture of your chart, because there's a lot of things that I can fix in the room. That's the small chart right now on the S&P. So you don't have the synthetic triggers. Got you. See, sometimes pictures help. So right click on your chart for me and go to data series and click on data series and make sure that tick replay is checked. And let me know if that's a yes or a no. So this tick replay, guys, this is what brings over the synthetics. This is the one that brings over. Okay, so you are ticked on there. Cool. So let's try this then. Right click on your chart and reload all historical data. Bonk. And what that's going to do is it's going to recalculate everything. A lot of times that's just enough to get something fixed. So right click, reload historical data. And it's going to reload. No worries, it takes a second. And then Wayne, did that make sense? The bar fight analogy escapes some people. Okay. You're just weighing out advantages, you know? I got to pass this guy on the brakes going into turn 3. Do I have room in case he tries to close the door, right? Do I have a second chance? Do I have closing speed on him? It's just like racing. You're not going to try to cut someone up the inside if they're 3 wide going into a hairpin. You're just going to wait. You're going to wait for that sweeper and just catch him when he breaks too soon. So let me know if that one worked for you, Narion. And then if it didn't, that's where I'm going to encourage you to go to Jason. I go through all my easy fixes. Okay. So do me a favor. I'm pretty good with the tech. I'm not great with the tech. Jason will get on your computer. He'll look at it. He'll have you fixed inside of 3 minutes. He always does. And I know that it's frustrating. You're like, man, I'm trying to learn this stuff and I can't get a synthetic trigger. He'll go through and make sure that there's not something going on that may create a challenge. And it'll take him just a matter of seconds, typically, to do that. Awesome. Very cool. And guys, all that indecision, they're trying to push down, but they haven't really pushed down yet. And that fib is still holding like a brick. Here's a good one. 1, 2, 3 divergences in the same price range. And it pushed the market up. Do you guys remember that lesson when we talk about the first rules? There's a good indication of it. And then check it out, Tracy. There is potential for there to be divergence to the downside. And that's what that flashing number tells me. But it takes until the middle of the third bar to decide whether or not it's true. So a lot of times what's going to happen is you might have divergence all the way up, or you may have divergence potential all the way down, but until that actual line prints, don't let it freak you out anything. Cool. Weak triggers, anything can happen, and it did. It pushed up. Divergences have nothing to do with the background, Hong. Nothing at all. It's just 3 of them in the same location. That can stop a trend. It can make it push up higher. One, two, three, same price range. That's what pushed it down. 1, 2, 3, same price range. Red, green, red. Off it goes. Pretty cool, right? 1, 2, 3, and this one didn't stop it. It may, not guaranteed to, but it's a pretty good red flag. There it is again. There's 3. It didn't stop it. So it won't always. If I'm trading the NASDAQ, Wayne, yes. If I'm not trading the NASDAQ, I tend to tune them out. Because they come from such small swings. Let me go to the glossary real quick, and I'll show you. Those small swing 1-to-1s are from really tiny little inputs, like boop, 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 and then they get littered all over the place. On the NASDAQ, I'll watch for them because they're higher time frames in a more volatile market. But on crude oil, ES, I just tend to tune them right out. And when I talk about the areas that may stop the market, you'll notice that pink 1-to-1s didn't come into the lineup, but yellow ones do because they're taken from bigger swings and are definitely more impactful. All right, 50-50. First entry right at the bottom. And then it becomes a trend trade. And you take it with confirmation. And you're able to make some money. Nice job, Steve. Joel, odds favorable, clear path. You got 3 divergences working there, huh? Choosing not to take it. And isn't that crazy? Is it may go down, right, Joel? But you just recognize that your advantage may be going away. I like that. That's a great picture. That's the just not yet picture. I'm telling you guys, taking pictures of things that when the rules aren't met is pretty powerful.